What is up, everyone? Back with another video. I hope that you guys are able to hear me okay. Inside of this video, I'm going to be speaking specifically yet again to my 9 to 5 traders. So if you are a 9 to 5 trader, you're a 9 to 5 investor, you're going to want to watch this video until the end. And specifically, we're going to be talking about how to swing trade / invest in gold. Gold is one of my absolute favorite assets to trade, and if you don't know how gold works, you're definitely missing out on a really good asset that, prints money, especially when the economy isn't doing so good. So, um, this is gold right here. There are many different versions of gold, but actually, before I go super deep into it, I do want to say thank you for all the likes and views on my last video. I got a lot of positive comments that, that specific video helped you guys out a lot on the side of your journey. If you don't know what video I'm talking about the 9 to 5 workers. If you're a 9 to 5 worker, here's how I became, basically going over my full story and that. If you haven't watched that, definitely give that a watch. Anyways, this video is going to be very similar to that. But before I go into gold, I just want to go over, if you guys watch me, one of the things I emphasize is having a portfolio, right? So with a certain amount of your capital, it should be invested inside of ETFs, long-term stuff. So 70% of your money should be towards the bigger ETFs like QQQ SPY, VTI, those type of things. 20% should be inside of gold and bonds. But by gold and bonds, I'm not really talking about, swing trading gold. I'm talking about more long term, keeping your money inside of gold stocks and gold mining stocks, right? Now, with the rest of this 10%, this is for our actual swing trading. And 2.5% of this goes to swing trading, gold swing trading, and Q swing trading, ES swing trading, these other things. Because the thing about futures, right, which is what we swing trade, we can also swing trade options, is the same thing. But I'm better, honestly, I'm honestly better at swing trading futures because I've been trading futures for a long time, a longer time. So the reason we swing trade though futures is because, let me explain it here. Let me get my board out. Futures have this thing, it's called leverage, right? And you guys probably know what leverage is, right? Leverage basically just means your dollar is worth more. Your dollar is worth more than it is right now, or your buying power is a certain amount higher than it normally would be. So futures gives the gold that I trade gives 21 x leverage or something like that. It's 21x leverage, and others give it depends on what you're trading. NQ gives a lot of leverage too. You'll see this all inside of Robinhood as well. So that's why people love futures. That's why people love options, because they give you a lot of leverage. You can make a lot of money from a little, way less money. You can make a lot of money. That's one thing that individual stocks don't really have as much. They don't really have, even TQQQ doesn't have the leverage that, gold or, futures, because even TQQ has 3x leverage. Futures 14x, 15x, 21x leverage. That's why you just have to know what you're doing. You have to get out when the trade hits your stop loss, things like that, because it's a lot of leverage. But there's also another thing. It's called the margin requirement. It's called the margin requirement. So what the margin requirement is it's basically let me see if I could pull up my Robinhood. It would be real smart if I could pull it up right here for you guys, but oh snap. If you guys are watching, say bless you. I don't edit anything out of these videos, but let me see if you guys can see my screen. See, you guys can see my screen. Yeah, I think you guys can see it. Okay, so the margin requirement is basically the required amount of money that is needed to open a futures position, right? So I pulled up gold right here. See if you guys can see it. This is futures version of gold. The specific one I trade is 1 Oz gold because the margin requirement is very low. If you do not meet the margin requirement, you cannot open up any contracts. So the margin requirement for 1 ounce gold for this is only $176. This means for $176 I can open 1 contract. If I wanted to open 2 contracts, I would need 176 times 2. So with this 1 contract, I have 21x leverage basically, right? Than I normally would have. Now, the thing about this is, with futures, right? We're using a certain strategy. So even though we have that much leverage, right? We're not just going to let our trades just, run. We have a certain stop loss, a certain entry, and a certain take profit. But if you're me, you don't really have take profits that much. But you know what I mean. You have a certain stop loss, certain entry. So let's say that I'm about to trade gold, right? This is MGC, which is micro gold. Get into that later. There's different types of gold. You have GC, which is regular gold, MGC, which is like a smaller version of gold, and 1 ounce gold, which is 1 ounce of gold. Basically, each one is worth a little bit less. You know how the contracts thing I just explained? 1 contract on MGC, which is like the one I'm on right here, is around $3,000 worth of like margin requirement, I think. Yeah, it's just, number one, it's easier for traders at different levels. Soon enough, I'll be trading MGC once I have a little bit more in my account. Yeah, but honestly, I don't really have any problems with 1 ounce either. So right here where we have the entry, we have a certain stop loss. So this stop loss right here, this distance between this stop loss is worth a certain amount. Let's say I put in 1 contract of gold. I'm risking 1 contract. I get inside the trade. I place it on my Robinhood. I'm like, okay, let me get in here 1 contract. And my stop loss is this distance. This is worth a certain amount. Specifically here is worth around $50. So I risked $50 on this trade. Down here, I got in with 2 contracts. I risked $100 on this trade. So that's the risk, and then this is the reward now. So every time it goes higher, we have our risk to reward box. Here would be a 1-to-1. So right now I'm up $50 on this trade. And then, you know what I'm saying? 1-to-2, 1-to-3, you make more. So this is like my whole swing trading, strategy. It's just simple supply and demand, honestly. Like, that's my swing trading strategy, and that's just one part of my entire model, like I was explaining earlier. You could do the same thing on NQ, YM, and all these other things. But now that you understand just what gold is, what contracts are in futures, I know it could be a little bit confusing when you're first trying to learn from it. I honestly find futures a little bit easier to understand than options, especially with the Greeks when it comes to options. But, see what you like, honestly. So, now we're going to get into the fundamentals behind gold and how to like really make money, especially when you're working a 9 to 5 job. Especially when you're busy all the time. You don't really have time to really be looking at the charts. How do you know when gold is going to make moves like this compared to when gold is going to be a lot more stagnant and not really doing anything? So, let me get my whiteboard out. Erase all of this. So one of the things that gold moves on is a couple. There's a couple of things that macroeconomically gold does. Number one thing to know is that gold tends to move the opposite of the dollar. Gold tends to move the opposite of the dollar. So the US dollar is the world reserved currency right now. And it is backed by gold. So it is known as a safe haven asset, but a lot of the times when the dollar is doing bad, people tend to want a more stable asset like gold. Gold is a commodity that's been around for ages. People love gold. People have been trading gold not since the charts have been here, but since the beginning of almost time. When you trace back like a long time ago, gold has always been one of the precious metals that signify money. So when the dollar isn't doing too good, people love to put their money back inside of gold. And by what do I mean by when the dollar isn't doing too well? I mean when there is, let me get some examples out. So when there is geopolitical tensions, let me just write wars, bruh. When there is war, so I could give you guys examples of each scenario where gold, like, when you study the charts too, just a little bit, or even just watch this video, honestly. But you can when you have time, you could go back and you can, monitor gold to see when it was moving. So geopolitical tension, right? If we go way, way back on the charts to, where's it at? Around February 2024. This was literally the war in Ukraine when that was like hyping up. War tensions were like pretty, more active during this time inside of 2024. A lot of things were happening with the war in Ukraine. So we could see that the price of gold skyrocketed because of that. That's one example. The second example, after that, gold also loves to move off of rate cuts. Now the dollar also does do well sometimes under, war tensions because it is a safe haven asset. It's very rare for me. I haven't seen it. I've only seen it like one time where the dollar was doing really good and gold was doing really good because people were flocking to the two assets because of war tension. But another thing that gold moves rampantly on are rate cuts. Rate cuts usually happen due to number one, lower inflation, number two, hyper unemployment. When the economy, as of right now, like an example is right now, which is why gold is moving, is because there is a lot of unemployment. People need a lot of jobs. A lot of people are getting laid off. You know, when the economy is suffering, basically, that's when gold tends to move. Sorry, it's too much. Duh. But yeah, when the economy is, actually suffering, that's when gold starts to move. And then I think that's number 3. Yeah, it's basically war tension, rate cuts, when the economy is doing bad, and when there's just like overall just like a lot of fear. Overall, when there is a lot of fear, that's when gold tends to do well. Fear. Gold loves to move off of fear, because when you're fearful, like for example, if you're fearful of the economy, you're fearful of the dollar, you don't trust the government, where are you gonna put your money? You're gonna put your money in something safe. And for me personally, right, my projection for gold is honestly way higher. I think gold. I've gotten so many questions in the past about, oh, isn't gold too high? Isn't the price of gold too high right now? I generally think that right now we're going through a phase inside the economy where the dollar is going to get extremely weaker. We're seeing it right now. The dollar has been falling basically the entire year. The entire year, the dollar has been falling, and we have, number one, we have rising debt inside of our economy that, we are paying back, us have to pay that debt back through taxes, through all these other things. But the situation isn't going to improve. Like, I don't think the dollar is going to get any stronger, from where it is right now. Even with rate hikes that might happen inside the future due to inflation, I don't think so. So I think people are starting to realize, institutions, there's been this huge move. Not retail traders, not us, but the big guys, institutions, banks, people with a lot of money, they've been putting their money inside of gold because gold is more safe, it's better, it's a safe haven asset. Gold and also crypto. They've been putting a lot of money inside of these two things because they're believing, and this has been happening for like a long time now. It's been happening for like a good year. Institutions have been like putting, like, look at this chart. If I just zoom out to a year ago, like imagine you put $100 or like $1,000 in here like a year ago. Look at where you would be at right now. Institutions have literally just been doing that while other people have been, wasting their dollars away while the dollar is continually growing weaker. Let me show you another reason why people like gold. It's because while the economy is doing bad and while, you know what I just said, while the dollar is getting weaker, gold is getting stronger. And the dollar, another reason is because the dollar has an inflation rate right now of 4%, which means every single year your dollar is getting weaker by another 4%, while gold is rising. Gold is rising way higher than 4% per year. For the last couple years, been averaging way more. So those are just a couple of reasons why gold moves. But now it's like, what am I supposed to do with this? What am I supposed to do with all of this information? How does this relate to me, my situation, my 9-to-5 job? Well, I'm going to explain to you guys how I trade it while I'm super busy. So, while you're working your job, one of the things that you want to pay attention to is just like general news. You want to pay attention to just macroeconomic news, right? And I want you to focus on two things. I want you to focus on inflation rate. So what is the current inflation rate? And I want you to focus on if we are cutting rates, right, or if we are going to hike rates. Are we in a rate cut environment, or are we in a rate hike environment? And honestly, one of the websites I use, right, to get this type of information is simple website. You could go to FX Street. This is one of the websites I look up for it, FX Street. Or you can go on Simple CNBC and see if they're talking about rate hikes, rate cuts. Or you can ask me. You can ask me and I could give you an honest answer on the gauge of the economy. Because it does take a little bit of time to look at the news, see what's happening, look at the charts, kind of circle it all together. But depending on that, right, if we are rate cuts or we are in some type of fearful environment, more than likely the charts are going to be looking like this. The charts are going to be looking very bullish, full of opportunity. After that, what I want you to do, if you don't know my strategy, I swing trade supply and demand like I said earlier. So you want to be on mainly the 4-hour time frame, looking for supply or demand zones, preferably demand zones, because of course we're looking to buy. So we're looking for demand zones on the higher time frame. Next, like I have marked off here, you mark off your demand zone, price comes back to your zone, you get inside the trade, you're risking 1 contract, 2 contracts, 3, making sure that your risk is appropriate to your account size. No over leveraging at all. One thing I like to do too is I like to keep a 50-point stop on gold. I know that's a lot, but I am a swing trader, so it doesn't really matter. And over time, you can increase your risk, but start out, risk 1 contract. Over time, increase your risk and all of that too. And yeah, it's going to be a really good hedge inside of your portfolio, and it's a really good asset to trade. I think once you like get good at trading gold, there are other futures contracts such as YM, which is the Dow. You have NQ. Where's NQ at? NQ is somewhere. Yeah, NQ, which is Nasdaq. There's so many things that you can swing trade. But anyways, I think that's it for this video. I hope you guys enjoyed. Sorry for all my sneezing today, but I do have allergies, or seasonal allergies. But anyways, I hope you guys enjoyed. Hope you guys took something from this too that you can apply to your own trading and investing. If you guys want one-on-one help implementing all of this that you see, I know you're probably on my Instagram, my YouTube, or whatever. You can book a call down below with me, and then we can talk about how I can help you, specifically taking you to the next level, especially while you're working your 9 to 5. But that's it for this video, and I hope to see you guys later.